because of the 8:30 news. So just wanted to watch 9:30, and then there's your drawn liquidity hit right at 9:30. So a couple things to go over, I guess, before we look at the 950 macro potentially, but sent out the daily bias post. If you take a look over there, we've got 15-minute gap lower than I'd marked out. Now, what is the reason that I selected this? What's the reason we're looking for sell side expansion during that, at least for the first hour here? And how Cardinal asked, how was there a buy side sweep within the 8:30 news? So if you look at this framework for the day, Asian range in here, right? Oh, by the way, if you go to the 1 minute, watch the breaker that may form. We just took out short-term sell side, but anyways, if you look at the framework of just these session ranges, there's always going to be some sort of market maker model within these ranges each day. Okay, so one will bring about consolidation. Most times it is your Asian range, but one will bring about consolidation. One will bring about the reversal. Sometimes you can have low risk buys. There's about 10 or so different stages, I guess you could say. I'm going to make a video on it soon, but basically saying, we've got consolidation here. We have a reversal structure with London here, right? Took out the internal range buy side, dug into a gap, and then we sold off. Now, we didn't get a low risk entry with the London session, so we're expecting a retracement going into New York. We've got the breaker in here, the high, low, higher, high. Extend that out. We also have a fair value gap on there too. So that is your unicorn setup, right, for 8:30. Now I said watch this high within the predictions chat, and then I also mentioned that we were looking for internal range sell side with the gap. Now, if you're thinking about a normal day, so that's why I was already framing a bearish setup, right? Okay, so we dug into this gap, and if you look at the 1 minute, as soon as 8:30 news hit, came out, took out the internal range buy side here, right? We got relative equal highs, sold off, and you can see during the macro time giving entries within the inversion gap, even with up to here. If you were a little early the macro, then we got wick up into the CISD, we got another wicks up into order block ranges, multiple opportunities to capture down into the sell side. So that's what we're looking for. Now, obviously, with a normal day, if we look at the trend, it's going to start at around 9:30 and then end between 10:30 and 11, right? So whatever our drawn liquidity is. Now, when we have 8:30 news, that time is shifted to the left. So your 8:30 news is going to be your true open, and then our trend end is supposed to be around 9:30 or 10 o'clock. So that's why we're going to assume, first of all, this 15-minute gap is going to be our target. If we're looking at AM trends, it's going to be either 15-minute or 60-minute PD rate. Now that can be sell side, that can be a gap, but it's going to be a 15 or 60-minute PD rate within discount of whatever you're looking at. So if we take this fib, drop it on top, right? We've got a 15-minute gap below market price right here, right? So market price is at 8:30, be up here, you're open, below market price right in there. And then if you read it, if you read the predictions chat, scroll up slightly, I said if we reach before 9:30 or 10, then watch for volatility to send us into the sell side. If we reach it right at equities open or 10 a.m., you could see a bounce out of the 15-minute gap. Now if we look at the 1 minute, reaches it right at equities open, could see a bounce out of the 15-minute gap. There you go. Okay. So it's a top-down analysis, first of all. So I hope that made a little more sense why we're expecting this gap to be filled. So now you can see the trend is basically done, right? We got our expansion, we dug into this 9:30 gap, and now we can basically be done for the day. I do want to see how the 950 macro plays out. I'm not expecting a whole lot for Silver Bullet. We did get some pretty clean price action in here, but you can see once you pair the 15-minute higher time frame, even the hourly higher time frame, 15-minute hourly and then you pair it with a 5-minute liquidity sweep, and then a 1-minute entry with macro time. It's very, very simple. Okay, so if you want like the sauce of how to trade macros properly, that's really your analysis. Is 15-minute market structure using the kill zones. What are we expecting in New York? Are we expecting a reversal? Are we expecting continuation? Are we expecting a retracement like this? Is there a low risk opportunity? There's different opportunities, right? So you frame it based on your 15-minute chart, and then go to a 5-minute, wait for liquidity sweep in the other direction using time, and then you use the macro time. So in this case, if we were looking for 8:30 news sweep, we wait for macro time to enter, and you can see given multiple opportunities down to sell side 32 points there, 24 points there, right? And I also mentioned, if you look at these gaps, this gap over here, if we're looking at this as a market maker model, as a proper market maker model, right? Where the gaps are unfilled going into the macro time. So we have this gap right here, right? That's just wicked back and forth. We have this gap lower, and we have a tiny portion in here too, right? So price is trading lower. We got to understand that each time that price wants to close this or retest it, it should hold as inversion. So in this case, we're trading, by the way, I do want to see how this order block range, this order block range here is held. You also have a gap right in here. Screenshot this really quickly, send it to predictions chat. What was I saying? Oh yeah, the inversion gaps. So we extend those out, right? Extend that out. So we have a fill here, and you can see the candle bodies are up to here. So we can reduce this now to just the candle bodies. Okay. Now we trade back lower. You see, we still respect that area. Respect the area. Trade into the order block. That can be a shorting opportunity within macro. Sell off. Now we get close to the sell side there, which anything like this should confirm your sell side move. Okay, when you have these kind of relative equal lows. But then what do? We retrace back up into a specific area that was unfilled. Right, we have this gap too. Obviously, if I extend this sibi out, we still have this gap. But instead we're trading up into an area that was inefficiently filled with candle bodies. Trades up into it, candle bodies placed on top of the IPG, and then we sell off into the sell side there. Now I'd mentioned in predictions chat too earlier this morning, we're going to see speed between 17,388 and 17,380. So if we look here, 17,388 would be below this low, down to 17,380, which was, if you look right below this sell side, we have more sell side here too, obviously. But we also have this gap, which you can drag this gap out. There's no buying or selling within it, right? But then more specifically, there's also a little portion that's unfilled right here, right? So we got this sibi, we close above it with no selling candle bodies. So extend that out and be even more precise. And you can see the speed between 17,380 and down into 17,380 even perfectly. There's your candle body. Make sense? So when there's no gaps to be filled and we have drawn liquidity, it's very easy to anticipate when price is going to quickly just spool like this. So filled it, came up, tapped into these tiny volume bounces here, as well as the sibi again, and then we just immediately just dropped off. That's probably the best price action we've seen in a while, for sure. Right, you can see now that we've actually had 8:30 news for the day, for the week, price action becomes very clean to read and very predictable. Okay. But obviously now we're just going to be waiting for 950 macro. We already came down, swept out the sell side. This gap was our target for the morning. So now, I mean, we're not really holding the gaps or the order block we wanted to see hold if we want to continue the bullish movement. So we can just be waiting. Obviously, we didn't get above 830 here. Otherwise, that would have been a nice shorting opportunity for looking for further sell side with this low. Now, to me, on the higher time frame, if we go to the 1 hour, kind of looks like Tuesday reversal potentially. We've got a huge amount of volume balance there, which is not nice. That'll mean that we probably will have to retrade. Yeah, so we'll probably have to retrade back into this range with the candle body. Depends on how we react to this daily imbalance. But we also have, if you zoom out on the hourly, also have this gap down here. Which, if you take the higher time frame daily range between low here and high, still in premium. So I guess if you wanted to target an actual discount period, it would be below here, which you could see expansion all the way going to sell side with the PM session. But going back to the London session here, if you want the profiles, we've got original consolidation, we've got a low risk buy, low risk sell, reversal, expansion. I'll actually type these up. But expansion, and reversal. Reversal and low risk buy, seek and destroy, which is just a kind of a reversal loop. And then your retracement, which is kind of what you see here in PM session 2. But like, if you go back and study this, like here's a date, here's Sunday. Now, obviously, with Mondays, it's going to be a little bit rough. But even here, right, we have original consolidation. Your Asian session is supposed to consolidate. So we're going to find consolidation range inside the Asian. See how there's very clear up, down, up, down. Very obvious, right? Extend this out. There's your sell side for the draw. We have a reversal structure in London, right? We're taking out buy side there, and we're digging into a gap. That's already qualifications for a reversal. Trade back lower, you get a CISD below this bullish breaker, right? Trades up, fills this gap, extend this gap over, and then you have your 930 news, or sorry, 930's equities open. Now, what are we looking for? Okay, we have a draw on liquidity. We need to see some sort of internal range buy side sweep. There's your, if you drop to 5 minute, there's your buy side sweep right at 930 because we don't have 830 news. Equities open. And then you can just use your 950 macro to target the sell side. Obviously, then you can see the trend ends perfectly at 11 o'clock. Right? Then we expand back up into the buy side. You can do this with almost every single day. Here we have original consolidation, reversal during London, same thing. Change in state, reaches up into the buy side, and then we have a continuation given at 10 up to 10:45, 11, which would also be probably a 15-minute gap or an hourly gap over here. Anyways, we'll go back to current price action. So if you want to study macros, there's the sauce you can be looking for. Whether we're filling the gap now with candle bodies. But with days when you have 8:30 news, it's best to wake up or just look at the charts during this macro time, especially when there's a very clear London kill zone, like a London kill zone, very clear Asian kill zone, things like that. You could also look at Monday as a continuation from Friday's price action. So Friday like this, we have super liquidity. We can just continue this draw. You can even see here there's a turtle soup, right? We have a gap, sell side, internal range sell side with the gap. You can be a buy right there, optimally. Like if you're looking at this as a reversal here, sell side opportunity, go for turtle soup long, targeting internal range buy side. And you can see the rest of the PM session also continues the trend up into the lunch high. But now we're trading back below here. If we close below, watch this bearish order block to be used as point of reference. We have pretty efficient filling here. Obviously, the gap's lower. Let me send a screenshot of this really quickly. Do you think we might chop because we are trading into higher time frame bisis and have FOMC, SMT with ES 6 a.m. lows too? I'm assuming that silver bullet hour is not going to be the best. If we don't really get an entry here to the draw liquidity, I'm most likely not going to enter unless we see a reversal at 10, which you can see we didn't get the, in this case, we're still selling off, which we could be heading for this gap or the sell side. So you could see this as just a retracement, right? And we're going to see the low put in around 10. I'm going to actually type that up in predictions chat too. And then you can obviously use that as a reversal structure. But you're right. We're trading into a daily time frame. bisi, we have hourly, 4 hour, all those gaps lower. Okay, and we already basically moved a whole lot from, I mean, yesterday overnight, right? And we already moved a whole lot in here, which is the 8:30 news. So, I mean, like, if Silver Bullet does not play out, I'm perfectly fine with that. Watch this wick. So see how the order block here? The wick overlaps with the gap. This is where, if you want to be more specific, you can actually use the wick of the order block. Price will respect that. And I mean, candle body is more specific, but wicks are fine in this case too. So if you look, whenever we break below something, we're trying to use a wick. Like in this case. Oh, this we have this up closing range, so you can extend that out. I'm trying to find a good example. I'll use consequent encroachment of that wick. Yeah, so look for the sell side, look for this gap lower, the hourly gap. I'd be actually surprised if we got down here right at 10. We've got like 13 more minutes. Okay, so here's your, if you're looking at the kill zones on the 15-minute, here's what I'm trying to identify. So I'll type it up for you. So those are some of the ones, about 8 or so. LRS, LRB stands for low risk buy, low risk sell. So that'll be your 2022 kind of entry. But if you try and identify each of the stages during the kill zones, and then you see which one actually reversed, you're going to be finding the one. You're going to find the one that reverses, then go there from into New York AM session. So if we have a reversal in London and it's a reason for us to continue, you see continuation. Could be expansion and reversal, like in this case, right? If you see no reversal given during London and Asian, then you could be seeing your New York session as your reversal, right? So in this case here, we have a New York reversal, obviously going to lunch. Here's a little bit different. This is a Wednesday where we have Hive week put in. So, I mean, this was last week, still in January, but oh, we had all-time highs over here, strong liquidity. Just join, my bad if you answer this. I don't know. I know you have said 10 a.m. news on days like this can distribute to higher time frame point of interest. So generally, are you opposed to entering prior to 10 a.m.? I'm not. This case, I was looking at the A50 macro. Do we actually have 10 a.m. news today? I didn't even see. We don't have 10 a.m. news today, so it's just 8:30 news. So no, to answer your question, no, I'm not opposed to entering before 10 a.m. Actually, preferably, I want to enter before 10 a.m. on a day like this. 10 a.m. If you look at this as the kill zone, normally it's from 9:30 to 11, right? And a day like this is technically from 8:30 to 11, but more specifically 8:30 to 10 is when you see the volatility spike. So preferably you actually see this macro as kind of the last chance. But yeah, when we have days with the news and 8:30, I like to see it kind of set up for us to use the news as volatility into sell side. And like in this case, whatever the opposing liquidity draw is. Yeah, no problem. Looking 50-50 to me. I agree. We already got the point of interest. We got the draw liquidity there. I mean, this also could be just be a premature reversal. I don't really know right now. We've got gaps in here we're filling. Filled them. Knife to macro. You got to be careful. The breaker in here too. You can see we just swept it out, and with the last two candles, we expanded pretty aggressively above the CISD point right here, this order block. So we got to be careful to see how these hold. Large RTH. Yeah, that also is a draw liquidity too, right? Large opening range. Let me actually mark out 50%. So we're starting to hold that. I feel comfortable just taking a small demo along, by the way. Tiny demo. Obviously, it's not the best, but I'll try and explain the framework you'd be looking for. But expand it up through the CIC as your breaker. You got this gap too, entering on the gap, targeting 20 points. You could be targeting above the relative equal highs up here too, I guess. But I mean, to be honest, on days like this, the rest of the stream is just going to be probably poor price action. You do get days where, just like on a normal day when we have a 9:30 equities open, 11 o'clock can sometimes bring about the end of the trade, I can't speak, end of the trend, but you can still see a trend movement occasionally going into lunch, right? That would be when maybe you're reversing right at 11 and you want to see continuation going to the rest of the day. Just like in here, if you want to see 10 a.m. technically be the end of the trend, you can still get continuation going into 10 a.m., into 11 a.m. technically. Everything is kind of just shifted back. Lower spread, much more high probability after the sweep. I agree. That's true. We did get internal range sweep here and here. We also dug into this gap. Or we're just putting it on for fun. Preferably external range sweep. That's true. This sell side down here. Also have this breaker too, which could cause a problem if we start trading into it in respect. So if you don't start to leave this bisi, I'm just going to close it out for break even. But I do want to see closure above these down closing candles, use that as an order block, and then we can get above this bearish order block here, which is right at equilibrium, right at premium and discount. So we got to be careful around this. If we see another respect like this and we start closing this bearishly, like, to be honest, I just don't want to see that gap filled. So we're in premium now. We got to be careful. I mean, this is the premium PD rate I'd like this price to be seeking. It makes sense for it. You can see the pretty good speed there up through the efficient delivery parts. Then once we get up to this area here, like we have the wick. If you look at the candle bodies specifically here and here, this would be your larger gap, probably on 2 minutes or anything lower time frame. So now we have a bullish order block here on top of the bisi. So yeah, study your London session and kill zones. Those are very, very helpful if you're looking at macros or even silver bullet. I would argue that you don't even need anything higher time frame than 15-minute, maybe 60-minute just occasionally. But really, if you're just looking at one trade per day, just on a macro, this is all you need. 15-minute kill zones. Find where the price is likely to draw to, either original consolidation or where we reversed from, and then find a specific time, either around 9:30 or 9:50, even 10:50. Like in this case, looking at this 10:50 here to be put in as the low sweeping sell side. You can use your 10:50 macro as a reversal. The fair value gap is the opening range one IC talks about. Curious how we react to it. There's your stop up, by the way. So feeling a little bit lower than I'd like to see. It was worth the shot. If it comes down, stops us out anyways. This macro is more than enough. This one, wait, let's see. I think that, yeah, that would be the fair value gap he's talking about. Or if we're looking at, there's a tiny one right here at 933. There's also a tiny one here. BPR in it, like this one. See, this would be your like first large fair value gap. Yeah, I agree. I'm moving this 15-minute gap too. So dug in a premium there into the breaker, which we held, right? I told you if you held that breaker, be careful with the stop out. But breaker in here. Order block now. If we close below here, look to see this as inversion. Something like this. And then into the sell side. We still have these gaps that are not filled, so we can see this kind of bounce again. High resistance liquidity run. We already got to the point where it's going to be low resistance, right? If we're looking at the 5-minute. Wherever we get the change in state is going to be where the low risk or where the low resistance liquidity run ends. Okay, so we have kind of this V shape whenever we're looking at the highs and lows. We have this high, low, higher, high. So up into where the V is, if we extend this kind of outwards, this is where your low resistance liquidity run is going to end. Okay. Same thing on the high. If we form something like a swing high, come through, so we have the same V shape. This is where if we were to trade back lower and then retrace back up or something like that, you could see very clean price action up into this high and then something very high resistance up into the high again. So just study this kind of price action too. Then you can find when there's very clean entries. Like if you go back, I'm sure you can, it works on any time frame too. So like in here, right, we have this V shape, high, low, high, lower, low, reversal, Now if we're looking at the V, extend this out. This gap would be your drawn liquidity, right, for the short term. But you can see filled it very, very cleanly up into here. Reversal, low resistance, up into the V, and then high resistance that follows all the way up into the drawn liquidity eventually the next week up there, right? This is your low resistance, I think what's it called, liquidity runs from month 1 core content. If you go back and just study this, you'll see every single time it's very, very reliable. Where do you see the reversal? Where do we see continuation from it? Take this case, here's another V, right? Change in state, dips lower into there. Then you get high resistance all the way down the sell side. Anyways, just useful stuff to know. So the same thing here, right? Dip lower into that V shape right here. That's your end of the low resistance right at 930. It becomes a high resistance, trading up, taking up buy side, returning to premium multiple different times. Having some struggle with this fair value gap here. But once we close below, look for your up closing candle range within it. And then trades back into. I mean, see now, like the move is already done, right? The move's already done. It's gonna be probably like just the same exact price action we saw yesterday. Tired of these low probability weeks. I know, man. It's frustrating because like every single week there's gonna be like 3 days at a low probability, and the days that we have we have 930 equities open, clean price action before it, and then it just comes into low probability again. Like I'm waiting for the day where we can actually cleanly predict every single aspect of the morning session. What, last day of January? Tomorrow is going to be most likely low probability too. Again, we have NFP on Friday, so post NFP should be high probability. So today AM session, I'm not going to be looking at FOMC. It's going to be a lot of volatility. PM session macro, so between 15:15 and 15:45 Eastern Standard Time, you have a macro in between there, right before the close. A lot of times during FOMC, if there's a untapped liquidity pool, you can use that macro to enter either the FOMC high or low, whatever the opposing drawn liquidity is. So PM macro today might be clean, assuming that the 2:30 news is nice. And then tomorrow we do have 8:30 news, so I might wake up for the 8:50 macro if there's really nothing clean before 9:30, 10 o'clock. I'm not going to be taking anything. I'll see if we do a stream tomorrow. Like we do have 8:30 news. We have 8:30 news and 10 a.m. news. So I feel like that would still be a good stream. Even if it's low probability, we can see the different news drivers. Yeah, so we'll probably still do a stream tomorrow. Or maybe just a tape read in the chat. On its way up, 17,675. $675. And now we're just chopped around, right? Low probability. When there's proper 8:30 news, I feel like we'll start the stream a little bit earlier on those days, either at 8:30 or even at 9:30, 9 o'clock, 9:30 ish, just so you can avoid this mess. Question: wasn't the price action into the 950 macro a retracement stage, or am I reading it wrong? So going into it, yeah, this would be your to be honest, I would still see this as a 950 low risk. Like, we got a reversal here at 940 ish. Low risk buy. The one that I entered on over here. See. But retracement stage normally only happens on Mondays or with news. Well, then again, where we have a whole bias that we framed in the morning with the 8:30 news, with the 950 macro, or sorry, the 850 macro, we have the drawn liquidity already met going into 9:30. So we are kind of just flying blind. We have no proper drawn liquidity. We could argue basically both sides. So the 950 macro becomes low, not low in the sense of it's going to be difficult to take a trade, but low in the sense of we don't really have an overarching structure that supports a reason why this would spool or why this would reverse. I was of the impression that a reversal would require liquidity grab first. I mean, technically we did grab liquidity, right? We had pre-market liquidity in here. Also short in here. Short-term low. But yeah, if you wanted to look at actual sell side down here, if you look at SMT, see we got SMT here with lows. Right, so a couple different things. Like this is huge SMT comparatively, right? So you can treat SMT as a reversal if we're reversing on one of them. Yeah, it makes more sense when you're looking at it from top down. Yeah, this is just like we saw yesterday and Monday. There's nothing in there. Hey, it's a good way to start off with patience. It's gonna test you. I mean, markets will always have this kind of prolonged period of where it's very hard to find a trade. And I feel like the last month or so has been like that. So anyone who's in a eval, or if you're just in live funds, anything like that, just trading in general, it's going to be a real testament to your patience and discipline in markets like this, because you don't see your model setup or just anything in your favor. You're going to be sometimes forced to trade, or not forced, but you're going to feel forced to try and take something that you normally wouldn't take, with sometimes the same or higher risk because you haven't taken something in a while. So just be careful. If there's nothing that you don't like, there's no point in risking it, right? Should have a good bias for the rest of the week after today. See how the weekly profiles plays. I agree. I mean, like, to me, it looks like Tuesday high of week. You didn't even put it in on. You didn't even put the high in at Tuesday, so maybe not. We could see a midweek reversal actually. We got relative equal highs up here, right? We still have tons of volatility news drivers left. Relative equal highs. We got a Wednesday reversal potentially with the daily gap and the sell side here. So, that's enough for a reversal, right? We just got to see a change in state, which would be above this high. If you put a candle body above your 2 a.m. high, then we could look at, Thursday, Friday continuing up into the buy side. That would be your Wednesday reversal. If you watch that AM trades video I sent yesterday, let me scroll back to my notes. Midweek reversal. We have Monday, Tuesday creates Judah swing or consolidation, and then Friday closes near the high of the week and continues expansion. So Thursday, Friday, if we see that, realistically, if we trade lower with the news, it's just a weird weekly profile. Like we don't even get a high. Oh, did we get it here? No, we didn't even get it on. Yes. These are hard conditions. I agree. Gotta stay patient. Which, I mean, if you're new here or if you're just new to ICT concepts, it just looks like every day is low probability. I trust me, it's not like this. It's just we're in a season of time right now where the setups are not the best. And it's just very difficult setups, like very difficult models. It's not going to be clean where we're going to predict every single minute of the day. Sometimes it's just going to be like this where we're not going to get the best setups going into the morning session. Remember last year, ICT was saying the same thing about terrible PA. Yeah, I think the quote is like the market can stay solvent or insolvent longer than you can stay rational, where basically the market can do whatever it wants. It can be low probability for weeks or months on end like this, and it can do that longer than you can stay rational and take the trades you want to take. So we're finally using this as inversion. We finally closed below it. Order block here. Like preferably this is left open as a breakaway gap. I want to say the left open. Then we have a gap here that potentially could form. We could use the wick in here, or I mean even the wick over here as your order block. Now, if you're trying to, I've said this before, but if you're trying to figure out which gap to use, if we have multiple gaps, or where in the gap are we going to use, price is going to refer back to order blocks. That's the point of reference. Okay, so it's not just randomly filling a gap to a specific point. It's going to be sweeping liquidity and filling a gap, or tapping into a order block with the gap. Now that order block is sometimes hard to spot. It could be an inversion order block. It could be on that right side. It could be a wick, but you have to understand where is that order block range. It could be a range too. Like in this case, we have this order block range. Extend that out. We have a gap at layers on top of it. Here's a good example. We have a larger gap, this sibi, right? More precisely, we're looking for candle bodies to fill within this section here, and we're looking for order block tap. We have all those right in here, right? You can see how precise price is when you're looking at something like this. Right, we have gap, we're filling the gap, candle by staying within this inversion and the wicks up into the order block. That's precision right there. Same thing here. We have a gap. I mean, implied technically, but you just keep doing that. Find gaps and then find where the order blocks are. You can be very precise with the entries. So finally, we're now displacing lower. Look for the sell side. Any higher probability setup you see in here to go short? I don't think there's anything in there. I mean, unless you're looking at this order block here. Gotta manage my trades better. I always drag my stop to high and it always hits TP. Yeah, managing stop is difficult. It's definitely something that's you have to always get better at. Always get better with the entries. Always get better with the exits. Like for me, it's a little bit easier when you have set in stone numbers. There's your sell side. Maybe. Oh, we got a gap over here. I mean, you have like a 20-point range. But typically, if price moves 75% of your intended draw, your stop should be in break even. My rule typically is obviously 3 PD arrays is one thing. So if price makes 3 PD arrays or closes past 3 PD arrays, we can drag our stop to there pretty safely no matter what. But if price moves 25% of the range, I'm not touching it. 50% of the range, for the most part, not touching it. unless there's a reason why I should move to break even, like if we're expecting speed or something. Watch how we fill this, by the way, with complete candle bodies all up to the premium end, and then sell off again. Wick over here. Took a demo off order block. I like it. Looks good to me. Like in that case, if I was looking at that trade, if I was on a demo, I'd be looking at moving the stop to right around where your entry is, right? We got the order block range, we got the breakaway, we got another gap here, we have an order block here, we have the bisi, a bunch of different stuff that if it was to come out all the way and stop me out off this high, there's enough context for it not to. That's what I mean. That's me personally, though. Retracement was at 8:30 as continuation off the London. Can't FOMO. Yeah, if we're looking at that, which that one definitely was a little bit harder. If you were looking at this, like sometimes it's difficult to see this as a reversal. You could see this as a reversal, right? But I mean, you could be targeting that low. Yeah, but it's difficult to see, right? We have consolidation in Asian, expands above it, and we break below. Now we don't really have a low risk entry that was given. So this is your retracement that you'd be eyeing down. Definitely difficult though, because I would see this as reversal too. Hold in the order block range. What else we need to fill? Over here. Yeah, I just get too focused on locking profits, but as long as I'm at break even, I should just let it run. Probably smart. Set it to break even and just don't touch it after that. FOMC might fling it to an all-time high bull trap before quarterly reversal. Maybe we already reversed all-time high strictly. Yeah, I agree. I wanted to see if we look at DXY. I mean, obviously we're looking for a quarterly shift, and we're also looking for the seasonal tendency to be put in between March and April, that low. So if we wanted to see a low form and preferably some discount daily range between the 20, 40, 60 IP to data ranges, then you need to see some sort of sell side sweep. So we don't know if this is the high that's being put in for the retracement, possibly taking out this swing low going into March and April, or if we're going to form another pump up, form that low, trade back down, take that sell side. Then we see the quarterly or the seasonal tendency to make a lower low in March and April. But I mean, just looking at the weekly profile itself, it's a little bit hard. We got to see FOMC or something, yeah, pop us all the way through for us to see this as a reversal. Otherwise, I just don't like us selling off into a gap. Nice market maker sell out on the 5-minute too. Oh yeah, that's clean. And this order block too, right? If you look at the 925 order block on the 5-minute, extend that out. Nice respect on there. Just pull this up. I don't know why I didn't have pull this up. Even on the 1-minute. Yeah, it's a. Oh, I like the larger one. Yeah, I agree. So you can see here the trend is continuing going into silver bullet hour. Also your breaker, technically, if I remove some of this clutter. So we filled this gap over here. If we extend this gap out, this 1 minute gap, drag that over, wicks into it. We got candle bodies now, buying and selling, right? This one's also with buying and selling too. So these are pretty efficiently delivered now. This is where you want to see speed into the sell side. Just wait for a closure, some sort of change in state. Last stop closing is here. So 1018. Could see speed below this. Same kind of thing like right in here, right? Got close to the swing low, traces into premium. Then we see a sell off, which if you're looking at the short term premium, just barely tapped it there. Could also see a retrace into here, but preferably this one's left open as a breakaway gap. Now, if you're looking at the dealing ranges, if you want the most like precise dealing ranges, you can draw them from buy side to sell side sweeps. So the reason I'm drawing it from here and not from this swing high, technically it's still a buy side sweep, but this swing high, we took out this high. Anyways, this is the most obvious buy side sweep or the buy side point, right? The buy side pool. Took it out there, and then the most recent swing low that was formed. By the way, watch to see if we get speed below here. If we close below that point, then get a closure. So you can use it on any time frame. Whenever you see a buy side sweep, like in this case, we got a buy side sweep down to the current sell side. So that would be your dealing range, right? And there's your, should see full just expansion lower. I want to see that sell side taken. No more tracements. Having trouble closing below. So yeah, if you're struggling with dealing ranges, it's definitely difficult, but it's most commonly your most recent swing high and swing low. Otherwise, you can measure it from the buy side sweep to the sell side sweep, wherever the current price action is. Like here we have this swing high that was made, taking out the buy side. So I would measure my dealing range from here to here. That swing low, right? And we're looking for premium. See that gap was in line with premium there. But sometimes this also happens. Get a gap there. Same thing goes with sell side sweeps. So we didn't get the speed we wanted. Put a candle body below and we're still retracing up. Anyone know why IC chooses February 6th to start? I assume it's because first month is bad, so January is poor, right? Then if we're looking at the monthly expansion or like the monthly candle, you don't want to be trading the first kind of accumulation area, or at least near the open. So maybe February 6th, if we look at the date, is right past that second week. Also, it's on a Tuesday, so we're avoiding the Monday, and we also have that kind of first couple days of the daily or of the monthly candle put in. So we're trying to capture as much as this as we can, which is the highest probability. Right? If we're looking at any kind of monthly or weekly expansion, you want to be getting this part of it. So that can go be your Tuesday low week, Wednesday low week, things like that. And then we trade the trend. So same thing on the monthly time frame. All done. See you tomorrow. Yeah, no problem. Enjoy the rest of your day. To be honest, we'll probably, once this drawn liquidity is met, we'll probably wrap it up here too. There's not going to be a lot of clean price action going to 10:30, I assume. Unless we're just expanding lower. Got a 5-minute gap here too. But I preferably you want to see that left open. I don't want to see it trade up into here. This dealing range, would you expect it to go for premium then clear sell side? So if we're taking this current dealing range, we just tapped it slightly there. You can see right here, tapped right into premium with the order block as our reference point. We haven't taken out that high yet. Now, I don't like how shallow this is, especially with a gap right in premium like this. But in this case, this is still technically enough. That's in premium, trade back lower. You can drop down to probably like a 5-second or something like that. Probably see a market maker some out on there too. Very, very rough one, but yeah, this first gap appears breakaway. I don't know why it deleted the annotation. This is your breakaway gap. Right, we're in the consolidation period. Leave it with displacement. That's your breakaway. First gap, first couple of gaps sometimes can be used as breakaway. Also leaving a higher time frame point of interest, which would be your 5-minute order block. Right? We extend that 5-minute order block out. Let's see if you can pop through now. There we go. So there's your sell side bagged and tagged. I'll send a screenshot quickly to predictions chat. Get the nice market maker sell model in there. I'll put this in macro view too, so we can look back and study it. So, I mean, definitely a difficult entry for the macro, but yeah, we're leaving this 5-minute order block here. Right, if I extend this out, if I remove some of this other stuff, order block here, we'll have it in purple. Tapping into it, tapping into it, tapping into it, tapping into it, leaves. Breakaway gap. So your higher time frame is 5-minute, and then your consolidation period you can see pretty clearly in there. So now, I mean, we could be looking for this gap, the hourly gap lower, which I still think is the drawn liquidity. We could even be looking at this swing low for very, very bearish. Probably for FOMC. But look at that gap. We're starting to expand lower. Nicely below the London low. Or the London sweep. Is time distortion until around 10:30? I mean, you could see that, yeah, right? Like we're getting closer to London close. Nice expansion out. I think this is just low. It's not even time distortion that much. It's just low probability price action. Right, we already got the move over here. Silver bullet hour, I told you it was going to be a little bit poor. So, I mean, it's expected like this. But yeah, 10:30 is a very important time. Sibi here too. I know it's 10:30. I know we're tapping into a gap. We still have room to run, but we're also at a day at a discount into the daily range. So going short here for 23 points, just not all that interested in it, even though we most likely will reach down into there. Anyways, so yeah, if you have time today, study your 15-minute chart with the kill zone indicators on, and then study, if you scroll up, look for every single one of these ones right here. Not the percentage. That. Click on that if you have time today. Each of these sessions, you want to use this indicator, you can. Here's my settings if you want to go back to the screen recording, or I'll send the settings really quickly. And then just study those stages of price delivery. Okay. Then, once you understand what you're looking for, you use time as your indication, right? So where is the drawn liquidity based on the sessions? And then what is a specific time element we can use to get there, or even to reverse off of it? Okay, that can be your 9:30, that could be 8:30, that could be around 10, that could be around 10:30, and that can be around 11. That's kind of like your best opportunity areas around those times to try and find your best high probability setup. So 8:30, 9:30, 10, 10:30, and 11. At those, around those specific times, we're going to see, especially if we don't have 8:30 news, then look at 9:30 and then onwards. Most times 10:30 and 11 are going to create some sort of reversal or retracement end to continuation. And there's your hourly gap tapped into. So, I mean, you got 20 points off this. Told you you'd probably still play out, but I'm not interested in it. So when the 10:30 macro is done, we'll screenshot that, send it to predictions or to macro v2. I'll send this over to predictions chat. So all the drawn liquidities met today. Despite a little poor price action there, took a tiny loss. But otherwise, A50 macro win. Pretty clean. I mean, that's basically all you can ask for on a Wednesday. Now, I would say be very careful as you approach FOMC. I probably will not be touching this till tomorrow. Even if tomorrow doesn't give anything good, then Friday after NFP. So yeah, be very careful today. We'll go ahead and end the stream there. So if you want any Jackson data, have any questions, shoot me a DM. I'll be more than happy to help you out. Same time tomorrow. Actually, no, not same time tomorrow. Around 9:40 tomorrow for the stream instead of around 9:30. Stream recording will be posted per usual. Stay safe the rest of the day. Don't do anything stupid. Follow your risk management rules. Good luck, good trading. I'll see you guys then. Peace.